You should really look at the pattern of Bitcoin after a halving.
Billionaire investor Chamath Palihapitiya explains why after a Bitcoin halving, price tends to go up.
1 month after a halving, 3 months, 6 months, 9 months, 12 months, and 18 months after a halving.
And watch today's whole video as Chamath explains why one Bitcoin could hit $500,000 per coin by 2025.
So here's a little Bitcoin price analysis for you guys.
And click subscribe to Altcoin Daily for one video per day, keeping you informed about crypto. And as Chamath explains, I'll break this down together with you.
So there's been a couple of halving cycles that have happened. And I asked him to go back and look at the price performance 1 month after a halving, 3 months, 6 months, 9 months, 12 months, and 18 months after a halving. And what you notice is that there are these moments initially where essentially when you go through a Bitcoin halving, people are sort of reassessing what's happening and they're trying to figure it out. That's sort of what I would say happens in the first month and roughly what also happens in the first 3 months. But then within 6 months to a year and 18 months of these things, there are these crazy price appreciation cycles that happen. So that's what this page shows, which is, 18 months after the first halving, the Bitcoin price returned 45x. After the second halving, it returned almost 28x. And after this third halving, it returned almost an 8x, which is really incredible returns in such a short period of time. If you go to the next page.
So first off, understand the Bitcoin price has increased materially following each halving, with the bulk of the returns realized between 12 months and 18 months after the halving event, meaning it's very normal to have minimal to no gains or price appreciation the first 1 to 3 months, like now. But also second off, while this chart is tracking the price return after 18 months, not from cycle lows, but the price compared to whatever the price at the date of the BTC halving was, notice diminishing returns. And I wish Chamath, as he goes on, would do a better job of pointing this out.
You go to the next page. And so if you graph that, this is what it starts to show, which is what is this price performance after each of these halving cycles. Now, why is that interesting? Well, it's interesting because on top of this halving, which theoretically, if history is a guide, we should see some price appreciation. Obviously, the other thing that's happened is we've commercialized Bitcoin. And we talked about this sort of as my big prediction for 2024, which is these ETFs are really going to allow Bitcoin to cross the chasm and have its sort of central key moment, right? And so if you apply the averages, and again, these are just averages, they're by no means predictions. Okay, so I just want to qualify that.
Yeah,
this
is not financial advice.
It's not financial advice. These are just guesses. Data. We took these and we applied it to the price of Bitcoin. And if you go to the next page, you start to see what could happen if you just take the average of the last few cycles. So because the first cycle was so extreme, and you start to
so you're just doing cycle 2 and 3 here, to be clear.
Just the averages of cycle 2 and 3. And what you start to see is some really meaningful appreciation. And when I talked to Wences about this, how he explained it, which makes a lot of sense to me, is there are a lot of countries that will never look at Bitcoin credibly, even if they support it. The US may be one of those. But there's an increasing body of countries that will become dual currency. And they will look at their local currency, and then they will look at Bitcoin. And they will say both of these two things are needed. One, when you're transacting on a daily basis for random goods and services. And two, when you need to buy a permanent asset that needs to have residual value, you'll use something like BTC. And I think that's a very powerful concept. And if you look at what this price chart could indicate, is that if this thing starts to get to these levels of appreciation, it is going to completely replace gold and start to become something that has transactional utility for hard assets. And I think if you marry that with this worry that some folks have about dollar debasement, you start to see some really interesting opportunity.
So there is altcoin news I need to share with you. Watch today's whole video. But Chamath's point is that Bitcoin could reach more than $500,000 per coin by October 2025, assuming it follows the same price pattern as cycles 2 and 3, really a couple $100,000 per coin minimum, with $1.14 million per coin maximum by October of next year. But this is where I have a problem, because as I said, a more realistic way to assess this information is not by taking the averages, because clearly we're seeing diminishing returns. As any asset grows bigger, it takes more money to move, it's harder to move, and understanding these diminishing returns, I think maybe a 3 to 4x may just be more realistic. But even if we were trying to play it safe and maybe just say 2x, 2 times the price at the date of the last BTC halving, which was several weeks ago on April 20th, and the closing price for Bitcoin on April 20th was about $65,000 per coin. So just a 2x from that would be $130,000 per coin by October 2025. Chamath, using averages, is going $500,000 per coin. Diminishing returns seems like the safer, more realistic play to me. Again, this is an ongoing story, so click subscribe for 1 video per day, keeping you informed. And as we begin to see cracks in the traditional system, the New York Stock Exchange, Berkshire Hathaway glitched, showing that it went bankrupt today. Actually, it was the New York Stock Exchange that glitched, or the data they were trying to bring on the platform. Chainlink could solve today's New York Stock Exchange glitch, as Berkshire Hathaway appears down 99%. And this is not the first time we're seeing the traditional system cracking. For instance, on March 18th, the Nasdaq faced a 3-hour disruption in pre-market trading due to connectivity issues with its matching engine. And the way a protocol like Chainlink could solve this is wipe pull data from one centralized oracle or even a few centralized oracles, when Chainlink offers a decentralized oracle network solution. We also have news for Ethereum. ARK Invest opts out of their spot Ethereum ETF, which was shocking to me as the SEC just mass approved the listings of all spot Ethereum ETFs. Why would Cathie Wood withdraw hers now? Well, in a direct quote, "At this time, ARK will not be moving forward with an Ethereum ETF," the spokesperson stated. "We will continue evaluating efficient ways to provide our investors with exposure to this innovative technology in a way that unlocks its full benefits." So sort of a non-answer, but the theory is that because the SEC doesn't like staking, and they were only allowing spot Ethereum ETFs if you didn't include the staking in it, Cathie Wood is waiting to unlock the full benefits. And in an update on my crypto journey, I have been staking my AIT protocol, and I just received my Bittensor Tau rewards, specifically 1.45 Tau for staking AIT, and with the price of 1 Bittensor currently valued at around $377 per Tau, my rewards add up to over $500 in Bittensor token. And the reason this is a thing is because AIT protocol is AI data infrastructure, with AIT being the first Web3 Bittensor subnet. So AIT is earning Bittensor, and then they're passing that on to their stakers. And the reason to me, one of the reasons that this is so interesting, besides just earning coin, Bittensor is sort of the blue chip AI coin of the cycle. But for me, the theory is this sort of limits sell pressure of AIT, because why would I sell this AIT that's making me Bittensor, that's making me ETH rewards, when if I needed to mitigate risk, I would just sell the rewards and then keep staking and keep earning. Also join us for Bitcoin Nashville, July 25th through 27th. Use code ALTCOINDAILY for 10% off your ticket. This is going to be such an epic conference. Come out, hang out, link down below. See you there.